All right, welcome once again to today's webinar, What's New in NAV 2015 Cash Management, brought to you by ArcherPoint. Smart cash management is the cornerstone to profitability, and Microsoft Dynamics NAV 2015 can help get you there. With enhancements to the cash management feature in NAV 2015, you'll have the tools you need to manage your cash flow, payments, and debt collections more quickly and efficiently, ensuring financial stability, solvency, and most importantly, profitability. Our presenter today is Bruce Kennedy. Bruce is a solution consultant with ArcherPoint. His functional areas of expertise are finance, manufacturing, and distribution. Prior to coming to ArcherPoint, he has been a technical consultant with Microsoft and a controller for a multinational manufacturing company. He has more than 25 years of extensive experience in functional finance, manufacturing, and distribution, including many years of pre-sales experience and consulting work on dozens of major ERP implementations. In just 30 minutes today, Bruce will cover enhancements to areas in cash management, including electronic payment creation, electronic payment registration, bank reconciliation, electronic banking, and bank data conversion. We will offer a Q&A at the end of Bruce's presentation. Please either type your questions in the questions pane of your GoToWebinar console as we go along, or use the raise your hand option to ask your question verbally. I will announce the person asking the question and unmute your line at that time. Let's go ahead and get started. Bruce, over to you.
Well, thank you, Suzanne, and thank everyone for joining us today for this cash management webinar. With NAV 2015, as Suzanne has stated, there's quite a few enhancements that Microsoft has made to cash management, and I'd like to go through those to give you a flavor of how those can help you in your day-to-day processing of cash disbursements, cash receipts, and bank reconciliations. So let's start off by doing the cash disbursement and creating electronic payments to our vendors. I'll go to our journals and I'll go to a payment journal, and I'll create a new payment journal to pay our vendors that are in euros. So I'll create the new one. We'll call it electronic payments. And the key here is the fact that this is going to allow payment export, a new field that's in the general journal cash balance or cash journals. And I'll indicate this is our bank account, and as I said, I'll use the Euro bank account to pay our vendors. Now, I'll simply open that up, and I'll suggest vendor payments. Similar to what we have done in the past, here I'm going to indicate that I want all payments that are due as of February 4th of the year 16. And I'm going to indicate that I want to calculate the posting date from applies to document due date, a new field that's in the suggestion for payments. And again, this will be coming out of our bank account for the euro. I'm going to also flag this as a currency of euro only, just to limit our filter. Currency code is equal to the euro. Say OK, and it has reminded me that I've only chosen euro currency code, and now it's displayed the half dozen or so lines that have met that criteria. Let's talk a little bit about some of the features that are new here. One of them is the fact that we now have a posting date that is in sync with the apply to document due date, indicating the flag that we had done on the previous screen has now earmarked the actual posting date for the cash disbursements to be at the due date of the paid invoice itself. You still have the ability to post, as we'll go through here, all of those transactions at a particular date, but you also have the ability to post them individually as they become due. Also, when we have done this, there's the ability to export this, and we'll go ahead and do that as well when we get to that. And another area over here is the recipient's bank code. So you can have multiple bank codes associated with your vendors, and this will allow you to transfer the payments to your vendors using the bank data conversion that was mentioned earlier. Microsoft has created a relationship with a third party that NAV users can subscribe to that will convert files from NAV to a bank format, as well as converting files from a bank format that you can download into NAV. So let's go ahead and export these payments. And I'm going to save the file, and I'll save it as file 101 on my desktop. When I've done that now, the system has earmarked that these have been exported to a payment file and the actual amount that's been exported. You still have the ability, as in prior versions, to be able to make changes, make deletions to the amounts, to the invoice itself, just as we always have in the past. Here I decided not to. I was going to go ahead and pay the full amount. Now, as I indicated earlier, you have the ability to simply go ahead and post the payments. But a new feature now is that you have the ability to delete these, and then receiving files from the bank as they clear allows you to post while you're doing a reconciliation. I'm going to go ahead and simply delete this range of payments. And now I'm going to go ahead and select another batch for a day later than what we had just done. So again, I'll go into Suggest Vendor Payments. This time, instead of for invoices due as of the 4th of February, I'll say as of the 5th of February. I'll keep the post or the posting date applicable to the due date, but I'm also going to indicate skip exported payments, those that we have deleted from our payment run, not deleted in the payments themselves, but deleted in the payment run. And again, I'll say, okay, same message as before. And now it's given me only those invoices that are due as of the 5th. If I go back here, let's go ahead and delete this just for a second. If I go back and run that Suggest Vendor Payment again, this time not indicating to skip exported payments, and run that with the same message, I'll get those three again, but I'll also bring in those that I had before. The system has earmarked those that have been exported for a file. In addition, there's information related to each of the payments, such as the register entries. Here is all of the information related to this particular vendor record for payment, as far as the recipient's bank account, the payment message, and all other pertinent information. And there's also a register that is created for the register that we had created, file 1001. This is now showing all of the information, and if we look at entries associated with that file, it shows those 6 payments that were associated with that particular file creation that we transferred off to our bank. So let's now go and look at another feature, which is the importation of invoices or payments from customers on AR invoices. I'll go ahead and remove this. Here I'm going to go to a payment reconciliation journal, and I'll use the Euro bank account again. So this is now allowing the user to import information, and again, it could be payments that we had just made as they clear the bank when our vendors have cashed those, or perhaps it's payments from our customers, which is the example I'm about to present now. So here what I want to do is import bank transactions. So these are those data conversion files that have been sent to us. I'm going to bring in this demo file, open that, and it's showing that I have 5 invoices that have been received from our bank, and I want to match those to open AR invoices. And I've got a couple of ways that I can do that. One is to automatically apply. When the automatic application is generated, it will go out and it will match invoice payments to open invoices based on criteria such as invoice number, document number, vendor, amount, as well as text that you can indicate on your payments received or payments paid. Here I'm going to automatically apply. The system has applied 5 out of 5. I'll come back and note the level of confidence. So here, here we've got 2 that are measured with a high level of confidence, 3 that have a low level, and if there was no indication there, it would also indicate that there was no level of confidence. So let's go ahead and see how the system has associated each one of these. This first one with a high level of confidence, we'll go and apply manually. And now these are all of our open invoices, and it has applied this payment to this particular invoice based on the invoice number itself, and it's also considered the payment discount that was possible. The amount of payment is less than the open invoice itself because of the payment discount possible. Therefore, there is no remaining amount to apply. It's also indicated here in the fact box that the amount includes tolerance, yes, single, means that it's matched it and there's only one invoice that met the criteria for that particular match, thus giving it a high level of confidence. You also have other fact box information such as outside tolerances. If I click here, it'll show all invoices that could have matched that, including the one that was a perfect match and the one that was within tolerance. So we're going to accept this. So we click the accept application, and let's move to the second one. Here we see a difference of a penny. Let's go indicate what that relates to. So here we see that our invoice amount meets that, but there is a penny difference as indicated down here. We can accept this, and by doing that, the system is going to ask us how do we want to apply the remaining penny. Do we want to create it as a second line on our customers' open ledger entries? Yes or no? And I'll say yes. So now we've got that, and it's now been applied to 2 entries, the paid invoice or applied invoice plus the open 1 cent. Now we've got 3 that have a low measure of tolerance. Let's go see how these have been received. Again, apply manually. We see that this amount has been applied, but the customer here has paid the entire amount, not taking into consideration the €231.95 discount that was associated. So now we can do very similar to what we had done in the first, is accept that payment and then put the $231.95 as an unapplied amount. We can either determine in the future if we want to pay the customer back for that amount or apply it to any open or future invoices. So I'm going to go ahead and accept that. Again, I will say yes for a second line. And now we have a 231.95 euro unapplied amount on the customer ledger entry. Let's take a look at the second one, this payment of $16,000 with a difference of $1,396. Again, apply manually, opens this. We see the amount applied, but it is far more than the amount that was granted, that $1,396 remaining after. And upon negotiation or investigation, we determined that the customer had negotiated a better discount term. It was granted, and the customer has taken that. So we will honor that renegotiated discount and indicate that the 1,396.34 euro is going to be the amount that we will honor. There is no amount remaining. With that particular change, we'll accept the application. And then the last is for a transaction on the 10th of February. There's a $231.95 difference as well. When we go and investigate that, we see that the customer has accepted the $231 discount after the fact of the terms, but again, we'll go ahead and indicate that we will honor that. We'll change the date to the 10th, accept that, and now we have that, with the only two extra lines being the single penny, which could be written off to the tolerance discount, or the $231.95 that we're going to either pay or apply to future invoices. And at this point, we simply post the receipts. So we've seen how we can create payments using electronic payment methodologies, and we've seen how we can import bank transactions, payments, as well as receipts, and we've done the receipts. Let's go to the final aspect, which is the new way in which NAV allows you to create bank reconciliations. So I'll go to Cash Management, Bank Reconciliations, and we'll open up this reconciliation. It's a different format than what we're familiar with in the past, where we have multiple tabs for checks, for transfers, for miscellaneous transactions that we may want to include for a journal entry. What we have on the right are all of the bank ledger entries that have not been reconciled. They're brought forward assuming that these are going to be part of the new reconciliation. Now we need to bring in the bank statement. And we have two ways that we can do this. One is a new functionality which allows you to import a bank statement. So we would be able to bring in a file. So if you're doing bank reconciliations on a day-to-day basis, weekly, monthly, however long you do that, you simply import that and it will populate the information. But for those that do not have electronic files to import, we can use the tried and true method of an old paper statement. So to simplify the methodology of getting those transactions from a paper document from the bank into NAV for reconciliation purposes, what we do is we ask the system to suggest lines. And when we do that, we indicate what our start date is, and I'll say all transactions up to, I'll use the work date, and include checks, and say OK. But what the system has done now is it has assumed that what is in an open bank ledger entry is also on the bank statement, which may or probably not be true. At that point in time, it's automatically applied the bank statement entries to the open bank ledger entries. But as I said, there's a good chance that one of 3 different conditions are going to be met in reconciling bank transaction entries to bank statements. One of them is we could have perhaps a bank activity that's in our ledger that is not on the statement. So we'll indicate that this line is not on our bank statement, so we simply come in here and we delete that. When we do that, it's now unapplied the bank statement transactions to that open ledger entry. Another is we could have transactions that are on the bank statement but are not in the bank ledger entries. Interest expense, for example, could be one. So here we'll go ahead and we'll create a transaction, and we'll make this a bank account ledger entry. We'll call it interest. We'll indicate that it's $100. And now we need to record that in our bank ledger entries. To do that, we transfer to the general journal. I'll use the general template with our cash journal. I'll say OK, and now it's created this transaction for $100. I'll indicate that it is an interest expense. We'll say of our revolving credit. And the offset will be to our bank account, worldwide operating. Now I simply post. We'll exit from here. Now we have that line associated, although I do believe I've made a debit and a credit reversal. We could then at that point automatically match. It has matched that up. We see that transaction. And that result, well, as I said, I made the reversal. Apologize for that. But now we've indicated the second methodology that we could use for reconciliation purposes. The third is if there's a difference between the transaction per the bank statement and the transaction per NAV, what we simply do is come into here and we'll say, for example, that there is a difference on this particular payment. We come here, we indicate that there is a difference. We ask the system to delete that application. It now shows as a difference. And then we would simply come into here, indicate what our bank statement balance is, and then go ahead and post the transaction. It will now mark all of these as reconciled transactions, leaving areas such as this as an unapplied, waiting for reconciliation for the next bank statement. So there's a lot more simplicity that's been created in bank reconciliations, making it much easier to get information into NAV from your bank statement, whether it be a manual bank statement or an electronic bank statement, allowing you to import that, and then simply indicating the transactions that are not reconciled, posting the balance, and then opening that up for the next reconciliation. Suzanne, that's what I wanted to show for the management of cash within NAV 2015. We've seen how we can use the new electronic payments for creating transactions to pay our vendors and then send those to our bank using the bank data conversion, how we can import payments from our customers as well as payments to our vendors, and then the new simplified version for bank reconciliations. Thank you.
Thank you, Bruce. Very straightforward. I don't see any questions at this time. So I just want to thank everybody for setting aside a few minutes of your busy day for this webinar. We hope you consider it time well spent. We'd like to continue to offer value, so please take a few minutes more to give us your feedback and let us know what other topics you would like covered in future Lunch and Learn webinars with Archer Point. Simply email your comments to info@archerpoint.com. If you have any questions after the fact, please feel free to send them to info@archerpoint.com as well. Again, I want to thank everybody for their time, and this concludes today's session. Thanks, Bruce, and thanks for keeping us on our toes today.
Thank you very much.
Have a great day.
Thank you all.